An ad appears in your social feed. A trading expert promises financial freedom. A company says it can erase your tax debt. And after you lose money to a scam, someone contacts you promising to get it back. Every one of these situations can look legitimate until you know what to check. According to the Federal Trade Commission, people reported losing more than $95 million in 2025 to scams that began after they ordered something through a social media ad. Those are reported losses, not an estimate of every loss. And one of the 5 traps in this video is especially cruel, because it targets people after they have already been scammed once. Start with the place many people shop without thinking of it as a store. The social feed. You are scrolling when a designer bag appears at 50% off for a limited time. That familiar setting creates an assumption. Somebody must have checked this advertiser. But the FTC says social media platforms do not always thoroughly vet the ads you see or the advertisers behind them. Anyone can pay to place an ad, including scammers impersonating real brands, selling knockoff products, or promoting a program that claims it can teach you to invest and beat the market. That does not mean every social media ad is fraudulent. It means placement inside a familiar app is not proof. The warning signs begin when the price is dramatically better than normal. The seller is unfamiliar. The offer pushes a limited time decision. Or the ad appears to borrow the identity of a known brand. Before buying, leave the ad. Search for the company independently. The FTC recommends searching the company name with words like scam or complaint. Do not rely only on the website, reviews, phone number, or links supplied inside the promotion. The first check is simple. An ad is not verification. But the product being sold in your feed is not always something you can hold. Sometimes, the product is a lifestyle. The product is no longer a handbag or a pair of shoes. It is the promise of becoming the person in the ad. A luxury car. An expensive watch. A tropical trip. A trading chart climbing behind the words learn to trade, get rich, quit your job. The FTC's warning is direct. Trading is risky. There are no guaranteed returns, and people can lose a lot of money quickly. A course cannot remove market risk or guarantee that a student will trade successfully. The FTC's article points to International Markets Live, also known as IM Mastery Academy and IOVR. According to the FTC's lawsuit, the company targeted young people on social media. The FTC says it advertised educators who often had no legitimate credentials and used false earning claims to recruit people into a large investment training scheme. Those descriptions must be understood as claims made by the agency in its case. The outcome described by the FTC is also significant. The company is no longer in business. Its leaders must turn over assets valued at more than $90 million. And they are banned from selling trading training services and investment opportunities in the future. Search the company, its executives, and its promoters with words such as review, scam, or fraud. Go beyond the first page, because early results may be paid ads. Check with your state attorney general for complaints. Then slow the decision down and get a second opinion from someone whose interests are aligned with yours. Guaranteed profits are not confidence. They are a red flag. And the emotional lever changes again when the promise is not to make money, but to erase money you already owe. Fear can sell just as effectively as ambition. A tax-related letter arrives with an urgent deadline. A company says you already qualify for relief. It promises to settle the debt for pennies on the dollar, asks for a large fee upfront, and speaks as if the outcome is guaranteed. The FTC says dishonest companies may make those promises before they have even looked into a person's tax situation. The agency's article describes a nearly $10 million settlement with the owners of American Tax Service, or ATS. According to the FTC, ATS mailed letters impersonating the government and demanded that people call by a specific date or risk property seizure. The FTC also says the company advertised on television, radio, online, and on podcasts, leading people to sales calls with false promises of tax debt resolution. Only the IRS or the appropriate state comptroller or revenue department can decide what relief a taxpayer qualifies for. Be suspicious when a private company claims it already knows you qualify. Walk away if someone demands the entire fee upfront. And remember that no company can guarantee a particular result, because every taxpayer's situation is different. For federal tax problems you cannot resolve on your own, the FTC points to the IRS. Taxpayer Advocate Service. For state tax issues, contact the appropriate state comptroller or revenue department. Do not let a deadline printed by a private company replace verification through the authority that actually controls the debt. Then pause, because losing money once does not always end the attack. Imagine losing money to a scam. Then, weeks later, someone contacts you and says they can get it back. That is when the second scam begins. The FTC says refund and recovery scammers buy lists of people who have already been scammed, hoping to target them again. They may promise to recover lost money, a prize, or merchandise that never arrived. To sound trustworthy, they may claim to represent a government agency, even the FTC, a consumer advocacy organization, or a law firm. Then comes the price of the supposed rescue: a retainer fee, a processing fee, an administrative charge, or financial information they claim is needed to deposit the refund. There are two risks: pay the fee, and you can lose more money. Share the information, and you may also face identity theft. The FTC's rule is simple: never pay up front for a refund, or for help getting one. Government agencies and legitimate organizations will not ask for money or financial information in exchange for refund help. If somebody contacts you, do not trust the phone number, email address, website, or link they provide. Search the person or organization's name with complaint, scam, or review. If they claim to represent a government agency, find that agency's contact information on your own and use it to verify the contact. Do not call the number the stranger gave you. Hope makes the recovery promise persuasive. That is why this trap can hit twice. Scam number 1: money lost, a supposed recovery agent, a processing fee. Then scam number 2. The final warning is different. It is not evidence of a new teen scam campaign. It is a preventive check many families may never think to make: a teenager's credit history. The FTC says that, generally, a child under 18 will not have a credit report. If one exists, it could be a sign of identity theft. It can also reveal an account or inaccurate information that does not belong there. The FTC directs families to annualcreditreport.com for free credit reports and says reports are available free every week from all 3 nationwide credit bureaus. Review the information for accuracy. Dispute errors you find. If someone used the young person's information without permission, report it and get a recovery plan at identitytheft.gov. The goal is not to frighten a teenager. It is to help them understand budgeting, credit, and the value of monitoring information attached to their name. Unlike an urgent payment request, this risk may sit quietly. The warning sign is delayed discovery, under 18, and a credit file appears. Check it. These traps do not depend on one emotion. The social ad uses desire. The trading pitch uses financial ambition. The tax letter uses fear. The recovery call uses hope after a loss. Identity theft can depend on delayed discovery. The common mistake is acting before independently verifying. So use one 5-step check. Stop. Search the name outside the message or advertisement. Verify the claim through a contact method you found independently. Do not pay under pressure. And use official contact information, not the number or link supplied by the person asking for money. A legitimate organization should be independently verifiable. The surface may change. The verification habit does not. The most dangerous traps are not always the ones that look obviously fake. They are the ones that arrive inside places you already trust: your social feed, your mailbox, your phone, or even an offer to recover money you already lost. Before you click, pay, invest, or hand over personal information, verify who you are dealing with independently. Subscribe to Before You Pay, so you can recognize the trap before it costs you.